Hello, I wanted to shoot this quick video, uh, basic introductory lesson to Murray math and to GAN channels or GAN fans, and how you can use more geometry to make yourself a better long-term investor and potentially a better trader. So Murray math is going to be divvied up into 8 different fractals or eighths. So Murray math effectively states that the market is divvied up into eighths. I'll remove this, which is what's called a GAN channel, all these different, kind of the peacock fan here. So I'll remove that so we can better visualize this. And all this says is this will identify for us uh, in 1/8 moves of the market, different points that we could expect to see reversals or pivots or imminent reversals, etc. So we'll start with the 3rd eighth through the 5th eighth, and price will operate about 40% of the time in the 3rd through the 5th. And just to note, these are 60 based on 64-day periods of time, anywhere from 32 to 64 days is when a Murray math line would be fitted. So we can see here, and it's delineated for us, ultimate resistance and ultimate support at 0 and 8. And then on either side, we'll have negative degrees and positive degrees. Now, one thing to note, so this negative 3rd degree, or this negative eighth, negative 3rd eighth, I should say, this imminent bullish reversal. The operative word here being imminent. If price were to ever hit the negative 3rd, we will get an immediate bullish reversal. And we saw this happen, we saw this play out exactly as it did here. So price wicks down, almost touches this on the nose. You can see this isn't actually even retrofitted to this line. Almost touches this on the nose before immediately gapping back up. We get a reversal back inside of this range of this bodied candle, and then price moves higher and continues to move higher all the way to the other end of, all the way to the complete other end of the eighth, right? All the way up into the 7th eighth. Now, on the opposite side, positive 3rd, exact same thing. Imminent bearish reversal if price were to ever hit positive 3/8, we would get an immediate reversal to the downside. Now, the same would not be true for like ultimate support or even oversold or extremely oversold conditions. And actually, you can see here we hit ultimate support, which is supposed to be kind of our last level to fall, and we didn't get an imminent bullish reversal. Again, imminent is the key word here. We did get a reversal, but it wasn't imminent. I mean, we had probably 20 days worth of candles print here before we did finally get a reversal into this bearish, or excuse me, into this bullish breakout. However, just note that just because price hits ultimate support does not mean that there will be an immediate reversal to the upside. I just want to note that because if any of you option traders are out there who, want to take some YOLO calls based on Murray math, don't come back to me and say that, oh, Sam said that 0/8 is the spot where I have to YOLO my calls on Tesla or whatever you're buying. So, anyways, now one thing, so this other fan or this channel that I had pulled up, Murray math was designed to make it easier for the average investor to read and to interpret. So this other channel that I had pulled up is called a GAN fan or a GAN channel. And okay, let's set it right there. So you'll see this also moves in eighths. So 1/8 all the way down to 8/8 or 8, or excuse me, 1. And this is meant to identify what channel is the market moving in. These are all supposed to be 45-degree angles of each other. Okay. But again, this is a little complicated and frankly hard to evaluate. It's just very hard to visualize. So these Murray math lines really make it much cleaner, much easier to interpret. Now, for an actual day trader, you may not find that much value in Murray math. I would suggest that you can use it to color certain biases you have. So this is a perfect example right here. We're supposed to be reversing off of the 1/8. We don't have to, right? It's not a hard and fast rule at 1/8 like it is at -3, but there's a very good probability that we do reverse. This is a great spot to stop and reverse unless we have confluence that says otherwise. Now, if I'm a trader and I recognize this, and again, this is a daily chart of Bitcoin, and I'm trading, let's say, a 5-minute chart of Bitcoin, I can look at this and evaluate and say, okay, if I can get down into if I see a right setup at about the $39,200 mark on a 5-minute chart, I'm going to go long expecting, Murray math to come into play a little bit. And we get a strong reversal up, or maybe not even a strong reversal, but just a good spot to stop and reverse. Now, where this will be very valuable is to the long-term investor. So I'm going to do another video, and probably it deserves its whole own series on how to pick stocks, how to discount cash flow, how to create discounted cash flow models, and things like that. However, this can become valuable upon just a cursory glance of any chart that you want to identify, okay, when should I try to scale in, or when should I try to enter a position of this certain stock? Like, let's say you really, really like Tesla stock and you've been wanting to scale in for a long time. You could use Murray math to just identify when the ideal time to open your position would be. So obviously, I don't want to scale in when we're at ultimate resistance. I don't want to open a position at 7/8 at a weak stop and reverse point. I'm certainly not wanting to get involved up here where we're extremely overbought. And on the opposite, obviously, I want to get involved when we're at ultimate support or at imminent bullish reversal. So just to quickly note, anything below 0/8 is identified. The only people that are selling in here are novice investors. So these are people who, basically get shaken out of their positions by larger investors, frankly, or whales as they're called. So a whale will come in, cause a big downward move like this. Novice investor sees it. It's very scary. And they decide, okay, right here, -1/8, I'm just done with this thing. I'm going to get out. I'm going to cut my losses. This Bitcoin thing's a scam. Whatever they tell themselves, right? Especially down here at -2/8, I'm done. It's going to go lower. It's going to go to zero, etc. And Murray math is useful in that sense, in that it almost perfectly identifies human behavior. And that's important to us because a market is a relationship between buyers and sellers. So it is predicated on human behavior. However, there is an element of math, as we've noticed, and really an element of nature that will even out and kind of evenly distribute our math. But that's a subject for a different video. Anyways, hopefully this is valuable for you. If you guys have any questions on this, this can be kind of a more complicated topic. Maybe it deserves a follow-up video to it, but feel free to post a comment if you want to see anything else. Otherwise, thanks for watching, and hopefully you found this valuable.